What does this mean for XRP and how might it impact its future? Well, a huge whale just placed a massive long position, and we'll get into the details of that soon. But before we dive in, all I ask is for you to flash me a beautiful smile and smash that like button. Likes cost nothing and spread good vibes, so why not? Right now, XRP is trading at $2.32, down about 2.29%, which pretty much matches the broader crypto market trend. The total market cap is down around 0.81%, Ethereum has slipped 2.63%, and coins like Polygon, Pepe, SHEB, and Solana have all dropped between 1 to 2%. So XRP is just moving in line with its peers. If we take a look at the 4-hour chart, XRP appears oversold, and there was a crossover on the 13 and 48 EMAs in this time frame. This could signal a potential bounce off the trend line. Plus, there's solid support around $2.26. If XRP manages to rebound from this level and holds above that EMA crossover, it might be a positive sign for the short term. We'll have to watch closely to see how that plays out. Meanwhile, Bitcoin is showing strong resilience, hovering steadily around the $10,300 mark for about 9 consecutive days. As we approach the weekend and head into the end of May, it'll be interesting to observe if traders start selling off for May or if we might witness some bullish momentum instead. Just a quick reminder, this isn't financial advice. Always do your own research before making any investment decisions. The market's unpredictable, and nobody knows for sure what will happen day to day. There are so many unknown factors at play: news events, political moves, ratings agencies, and none of us can predict those with certainty. Also, I'll never reach out on social media asking for money or trying to get you to sign up for anything. Those are scams, so please stay alert and protect yourself. Going back to the market action, someone recently opened a massive $276 million long position on Bitcoin. That's a huge bet. Does this whale know something we don't? Not only that, but the same trader took a 20x leverage long on XRP, worth $34 million. They're also heavily long on Pepe with $43 million in play. This kind of confidence is definitely worth keeping an eye on. While XRP is slightly down right now, those other positions are showing gains, which makes this situation all the more interesting to watch unfold. This is a seriously big whale making moves, makes you wonder if they're sitting on some insider knowledge. We'll have to wait and see if XRP breaks out soon. One key thing to watch is that starting Monday, XRP futures will officially launch on the CME group. I mentioned this a few days ago, but it's worth reminding you again. This doesn't automatically mean the price will go up or down, but in my view it signals that XRP could experience more price swings moving forward. Some traders might welcome that as an opportunity, while others could see it as a risk. The main thing to understand is that this new futures market could lead to increased volatility over the weekend or even possible price manipulation, since the futures won't trade on weekends but XRP itself does. This gap between futures and spot trading is something important to keep in mind. Before we dive deeper, I want to shout out our partner BTCC. If you're curious about leverage trading, they offer a platform where you can go long or short on various markets. What's really nice is they have a demo mode so you can practice trading with virtual money before risking your own. If you get comfortable and confident, then you can switch to real funds, and if you're already experienced, you can jump straight into real trading. Just a friendly reminder though, trade with caution. I've made plenty of wins and also faced losses, including liquidations and stop loss triggers. Even though Bitcoin has been around for over 13 years, we've seen exchanges shut down or go bankrupt. So please always read the terms carefully and fully understand what leverage means before jumping in. Now let's talk about what Tom Lee recently shared and what it might mean for the market and XRP specifically. We'll look at his insights on where things stand right now and what could be coming next. Tom Lee, a contributor to CNBC and Fundstrat, joined a segment from Miami, and he made some interesting points. When asked how the risk-reward ratio is actually better now than before the trade war started, he explained that back in February, when markets were at all-time highs, there were many uncertainties ahead with less clarity looking toward 2026. Today the outlook for tariffs is much clearer than it was a few months ago. Looking ahead to 2026, there are positive expectations like deregulation and tax cuts. Basically, he's saying that in February, no one really knew what to expect, especially around tariffs, but now things feel more predictable. Back in February, before the stock market even started to pull back, we saw some wild days in the crypto space. Remember how the market just went crazy, with huge sell-offs happening. The stock market also experienced its own declines around that time. But now things are much clearer. We have a better understanding of what's coming. Markets usually try to predict what will happen about 6 months ahead. So if investors believe the situation will improve in 6 months, big money tends to flow in. When uncertainty looms, markets often stall or consolidate, and when fear spikes, selling usually follows. Compared to February, when both stocks and crypto were hitting record highs, we now have much more clarity. Bitcoin reached its all-time high back then, but XRP's peak is a bit more debated. Some say XRP hit an all-time high on a Korean exchange due to the exchange rate between the Korean won and the dollar, but that's a bit of a technicality. Let's just call it a local high for now. It will be interesting to see how things unfold. Tom Lee calls this the fifth stress test for businesses. Taking everything into account, he believes price-to-earnings ratios will likely be higher in 6 months rather than lower, and he sees potential upside for stock earnings in 2026. Although he keeps mentioning 2026, he's not dismissing the rest of this year. There's still plenty of time for significant moves. That sharp drop in stocks earlier was almost like a complete reset for market positioning and sentiment. Investors were forced to sell when the VIX hit 60, but many institutions didn't fully jump back in during the market rally. That's why Lee thinks any pullbacks going forward will probably be mild because investors are currently underinvested. On top of that, sentiment is just now turning neutral. So as investors shift from resisting the rally to becoming more neutral or optimistic, that creates room for stocks to rise. What's fascinating is that this idea also applies to crypto. On the stock side, hedge funds and big institutions were the ones selling hard, while retail investors were mostly buying. Now those big players might either double down and short the market aggressively, or the dips we see won't be as sharp because many fearful or inexperienced traders have already exited. These scaredy cats, as you might call them, have already liquidated and are likely to return once the market starts moving up again and FOMO kicks in. That's an intriguing perspective from Tom Lee worth thinking about. Jeremy Siegel, much like you, has turned more optimistic lately, highlighting what he calls the Trump pivot on tariffs. However, he still recognizes that tariffs are likely here to stay. Whether it's 30% on China or 10% on other countries, it's still a bit of a setback, right? Well, we're definitely in a new era when it comes to tariffs, and companies are adapting. What we're seeing now is that the market is starting to look beyond some of the supply chain chaos. Sure, stocks have been disrupted, but investors are beginning to factor that in. You're right that this new reality is essentially like having a consumption tax on imported goods, but that doesn't automatically mean price-to-earnings ratios have to drop or markets must tumble. It's just something we need to navigate. When it comes to rising